Oh, good afternoon, good morning, everyone. This is Live with Main Street, and we've got Anna, Eric, and Jim. How's everyone doing today?
I'm doing fine.
Doing well here.
Great. Well, what do you think? It's March 15th, and we've got a month and a few days until our taxes are due, or hopefully you have already filed your tax return. So the theme for our discussion today is tax season, and we all have a few tips and tricks to share with you on how to maximize your tax refunds. Hopefully you have some, and to share some of the things you can do to save on paying your taxes. So let's start our discussion by talking about what can you do to save money on taxes for 2016 tax returns. So we're still talking about that. Jim, you've got any tips for our listeners?
Yes, Anna, just a few though. If you have not funded your IRA and you can take a tax deduction for it because you don't participate in another retirement plan, you should do that before the tax deadline, which is April 17th this year. We actually get 2 more days because of the calendar, and we appreciate that. If you're self-employed, you can't start a new plan this year, but you can fund a plan that's already in operation. So if you have a SEP IRA or a simple IRA, you still have until the tax deadline to do that. I'd also encourage people to go over their expenses, because many people take the standard deduction because they can't get enough expenses to itemize, but really scrutinizing that, because anything you can do to be above the standard deduction is worthwhile. And also people that are self-employed, even if they have a part-time little business on the side. I talked to an Uber driver the other day and encouraged him to itemize all the things he's doing on Uber because he's self-employed. And if you work out of your house, like many of us do, then taking the office deduction is a good idea. In the past, people felt that was a red flag for the IRS in an audit. It's no longer the case as long as you're prudent by taking pictures and showing the office, showing where you do your work, that it's the majority of your time, and that you don't do other things in that room that would be personal stuff that would conflict. And those are the best ideas that I've got for saving on your 2016 taxes. Anna?
Sounds good, Jim. Eric, you want to comment a little bit more on itemized deductions? I think you had some points there to discuss, because that's one that a lot of people overlook and don't think.
Sure. Specifically the medical deduction. A lot of people I know, a lot of clients I'm talking to are taking care of their parents, and they're helping their parents by paying for medical or offsetting their bills. And they may be able to take those expenses that they're paying for their parents' medicals and add it to their medical deduction to get over the 10% requirement. To claim a medical deduction, you need to make sure you're spending more than 10%, which can be difficult if you're young and healthy. But as you get older, it gets really, really easy because prescriptions get more expensive. Maybe you're having therapies. The example I use is dialysis. Somebody's driving to and from dialysis to get dialysis done. They can claim the mileage to get there and the mileage back, as well as paying whatever the insurance company doesn't cover. So that's where I'm looking at, and I've found a lot of my clients have found use, especially in the sandwich generation. They're paying for their kids' braces, and they're paying for their parents to take, help offset some of the medical expenses.
Yeah, very well. I've actually gotten a few questions from clients about having a tax refund, or some clients actually like the idea of paying a little too much tax out of their paychecks up front and then having a tax refund. So I came up with a few tips to put that tax refund to a good use. So first I want to look at, so if you do have a tax refund, maybe perhaps, right, and this is just a thought, you can think about changing your withholdings. If you like the idea of getting a little bit of money once a year and doing something good with it, sure, but think about that. You could be using that money throughout the year. Yes, it may not be a whole lot, a couple $100s per paycheck or whatever that number is, but you could be doing something with that during the year as opposed to waiting for a big chunk. But if it works for you, here's some suggestions. So if you've got, especially if you have debts, things like credit cards, if you carry balances on your credit cards and interest rates are high. Student loans are really popular these days. If you have home equity line of credit. So if you get this tax refund and you're wondering what to do with it, how about applying that amount to paying down these debts? If you think about putting that in the savings account aren't paying much interest these days. So however you look at it, probably the best place, if you have debts, would be to start there. Now, emergency fund. This is a big one after you make sure that your debts are covered. If you do not have 3 to 6 months worth of emergency reserves saved up somewhere, even in that boring 1% savings account that you can get these days, that's place number 2 where you can dedicate your tax refund. And then if you've got your debts covered, that's not an issue. Your emergency fund is 3 to 6 months saved up. How about we think about retirement? Because we're going to have to be retired at some point in our lifetime. That day is coming for everybody. And I know that almost all of us have to save a little bit more. So think about things like, are you maximizing your 401k contributions if you have a retirement plan such as a 401k? Could you do catch up? Do you have an IRA and maybe you could do a catch up contribution there? If those are already in place, how about a Roth IRA if your income allows you to do that? If those all are in place, then let's think about saving in taxable accounts, but earmarking those savings or this tax refund for retirement. So those are my tips for maximizing the use of your tax refund. Jim and Eric, do we have any more suggestions or comments?
Jim, I just want to clarify for our viewers, if they've already filed their taxes for 2016, is there anything they can do, or should they be thinking about filing an amended return given the information you gave?
You know, it's a magnitude issue. So if they would get, say, more than a couple of $100 back, maybe a couple of $100 would be the issue. A lot of times, even if someone else prepared your taxes, you could go to a program like turbotax.com and they have an estimator. And so if you just put in the numbers that your tax preparer did, and then you put in some sort of an IRA contribution, and you see the change in your tax liability, and if it's $200 or more, it's probably worth your while to do. If it's less than $200, then you have to kind of make up your mind, is it worth the hassle? And if you have to pay somebody to file an amended return, that might cost you $150 or so. So that's what I was thinking, that $200 bar might be a good rule of thumb to file an amended return because of the cost of preparing it.
Yeah, and I also think that, sorry, go ahead. You wanted to finish.
The one other thing in commenting on Anna's suggestions, if you do change your withholding and increase your withholding, you could, by not changing your withholding, automatically start saving, say, another $100 a month out of your checking account in either to a retirement account, or if you're not qualified for retirement accounts like IRAs or Roth IRAs, then you could just do it into that taxable account. So sometimes you don't have to change your withholding. You can just use that extra cash flow to fund it up front, and then when you get the refund back, it's because you took it out of your checking account to begin with, or it could be funding next year's paycheck deposits to those accounts. Anyway, just my thought.
Yeah, that's a good strategy too. I also wanted to say that, okay, so if you filed your tax return for 2016 and it's all said and done, and perhaps take an inventory of all these suggestions that we just made and see what could be applicable to your situation and start doing it now. If keeping track of the miles that you drive your parents or your children to medical appointments is something you missed last year, start doing it now. There's one saying I like to say lately is there's an app for everything. So if you need a tracking device, we've got one for you. I am sure it's on your smartphone. So, and don't beat yourself up. If it's really worth a lot of dollars to you, and per Jim's suggestion, $200 or more, do amend a tax return. But I know you could do better next time as well. So that's my 2 cents on that.
And if folks want to retire earlier, think about that part-time home office job, not one of the scams that are out there, but there are things that you can do. And I follow a number of people on YouTube who are actually doing videos. And because they partner up with Google and YouTube, they're actually making money off of a video production. And that's a great home office part-time job making money. So I'm encouraging people to be really entrepreneurial. And if you can save more money, you can retire earlier. Why not aim for financial freedom earlier in your life?
Yeah, we live in the what's called gig economy. So there's always a way for you to put your skills to use. So do it. All right, well, those are the tips and suggestions we have for tax season 2017. Let us know if you have any questions, and we'll be back next month. Eric and Jim, thanks for your time. Have a great day.
Take care.
Bye, everybody.